Okay, welcome everybody to our Wisdom Wednesday. I am excited to bring to you Ed and Frank. They are with Aspen Creek, and if you were at conference, we had some fun with Destiny, who's also in here because she is waiting for you at the table or online here. So I just want to welcome Frank and Ed. They are our senior consultants over at Aspen Creek, and they're going to drip on you some knowledge with taxes and savings and all the goodies that they've got lined up. So I'm going to let them take over here. And if you guys have questions, you can either put them in the chat and or raise your hand. That'll probably be the easiest way so that we can kind of streamline this.
Great. Thank you, Alyssa. My name is Ed Roberts. I'm with Aspen Creek. Glad everybody's with us today. Thank you for joining and taking the time. So today we're going to be educational and informational. We're going to be sharing information, generally speaking, that will assist you with your knowledge on ways to mitigate taxes. We often ask our prospects and clients, when is the last time your CPA called you with a good idea to reduce your tax liability? And obviously, as most of us know, that doesn't happen very often. Most of the CPAs that we deal with and encounter are reactive in our minds, which means they're looking out the rear window. They're looking at the rear view mirror, and they're getting your taxes taken care of for you, and they're basically getting everything prepared and telling you what you owe, what kind of liability you have, and then just forwarding your returns to the service. So we like to be proactive in nature. We want to take that different step and be proactive and assist prospects and clients looking into ways to reduce your tax liability. All IRS, code supported. We don't do anything that's not supported by the code. It's important for you to know also, Frank and we're not attorneys and we're not CPAs. We have strategic partners in place, tax attorneys and CPA tax strategists that help us with our clients and help us design and structure the best IRS supported opportunity that the clients have to save taxes. Today, we're going to be going over general information and sharing just probably 20,000 foot ideas with you and general information. Today is not the day to do a deep dive. If you're interested, you hear something that you feel like you need to learn more about, we are more than happy to meet with you personally and dig deeper into your own personal situation. The whole point of this is to try and help folks, not leave taxes on the table, to help you expand your horizon with knowledge and understand exactly what you can do, whether it's income mitigation, capital gains mitigation, it's estate planning. We can help with that as well. But again, educational, informational today, and we look forward to visiting with you at the end with questions you have. If you do have an urgent question, please raise your hand or speak up, and we're happy to accommodate your question. Frank?
Yeah, thank you, Ed. Good afternoon, everyone. And I see a couple of familiar names, but we're glad to be here. So we're going to give some data points and some educational material, as Ed mentioned. The big deal with real estate professionals, you guys earn great money. We talked a little bit about this on stage, but you earn great money. You're dealing with tax issues, and a couple of you that we have met with, that's the case. How do we deal with taxes and mitigate, significantly reduce the situation this year? The thing that we typically see is, I waited too late to do this type of planning. My CPA, didn't tell me this. Situations like that. And I asked from the stage, how many of you feel like you're paying too much in taxes? And we want to, like Ed said, shift that from reactive to proactive. So let's kind of shift into, Ed, if we want to start talking about kind of entity structures and some differences there and what we're seeing as kind of the top things that can be knocked out immediately with planning.
So some of the 101 type of information that most of you, if not all of you, are probably aware of is, let's talk about sole props. So we got sole proprietorships. Again, that's the low rung on the ladder. We encourage most, if not all of our clients to basically structure their businesses as an LLC being taxed as an S-Corp. The fact is, it's very factual that as far as audits are concerned, sole props are the most audited entities that exist. We then go to C-Corps and other corps. That's your next level of audit. And then finally, your LLC structure that taxes an S-Corp was the least amount of audits that happen with the IRS. And it's a 9-to-1 figure. It's again, sole props are audited on a 9-to-1 ratio. And they're just being structured with an LLC as taxes an S-Corp gives you so many additional advantages. You want to lease a car, buy a car, put it in your LLC, other expenses, insurance rates are lower for your coverages, different business costs that you're able to write off through an S-Corp. It really does produce, in some cases, a significant savings to you. So, the other thing about S-Corps is you can pay yourself a reasonable salary and take distributions. That's an advantage to you as well. And it's also better asset protection. Having your business housed in an LLC, gives you a pretty good buffer to folks that might come after you that want to penetrate your business. It does have a very good protective opportunity in place for you. And again, an agent shifting from a sole prop to an S-Corp can save anywhere from $12,000 to $18,000 to $30,000 a year, depending upon the size of their business, their amount of expenses, and what they spend on outgoing marketing and business development. Agents, in our opinion, based on conversations we've had with our tax attorneys and CPA strategists, are, if you're anywhere in the range of, if you're anywhere earning over $100,000, it's really would be beneficial to you to at least have the conversation with either us or your CPA to find out, what you should do about restructuring your entity. So, just a few, that's boilerplate stuff. I think everybody probably knows this already, but again, just want to throw it out there because we're going to start and have kind of a progressive conversation today. Frank, if you want to look at, talk about overlooked deductions and advanced write-offs.
Yeah, absolutely. So from looking at the big, beautiful bill, I know you guys heard a lot of this from Chris up on stage, but from our point of view, there's 3 big benefits for real estate agents of looking at the big, beautiful bill. The top one is QBI. We've had those discussions with some of you guys at Star Power. 20% QBI deduction, that's a big deal. The second one is 100% bonus depreciation in Section 179 and being able to leverage that. And the third one is the standard deduction being doubled. So those 3 things are kind of those top things from our perspective that we see for real estate agents to be able to take advantage of the benefits of the big, beautiful bill. Now, when we talk about some overlooked deductions, so a lot of this, work with your CPA on this if you have one that you're really happy with, but work with your CPA on identifying ways of categorizing things a little better. As an example, if you have children, if you look at hiring family members and getting deductions that way, health insurance being categorized differently so that it is deductible. A lot of people don't know that. We've talked about vehicle depreciation. if that makes sense. Not just getting a vehicle just to depreciate and get that big deduction, but if there's use for it for your real estate business. Tech and marketing. So you can categorize those things. You guys use a lot of technology, a lot of marketing material in what you do, categorizing that such that it's business investments and you're able to properly deduct that. Meals and networking, categorizing that as prospecting, client appreciation, your coaching programs like Star Power, your masterminds, those types of things can be classified properly for you to get those deductions. And the Augusta rule. Documentation is a big deal. If you all are using the Augusta rule, then you know what I'm talking about. But certain things like team training, marketing retreats, client appreciation, like I mentioned earlier, those are the types of things you want to be discussing with your CPA and letting them know, how can I best do these things for my business and allow me to deduct them. A lot of this is kind of basic stuff, but we want to make sure that it's top of mind as you all are planning for this year. Okay. Ed?
Great, thank you. So let's talk a little bit about tax deferral and long-term strategies. Yeah, I'll have to excuse me. My allergies are hitting me a bit, so I'm voice is a little scratchy here. Anyway, so one of the things that we also see quite a bit is folks that take advantage of the S-Corp structure, the LLC taxes and S-Corp, is the ability to save additional monies and mitigate taxes through deferrals. And one great example I always like to think about is we worked with an agent who was structured as a sole prop. We were able to meet them before the end of the year, and we restructured them as an LLC structured or taxes and S-Corp. And one of the things we were able to do is start a SEP IRA. And obviously the limitations of what can be contributed to a SEP IRA or other options within the code for deferral. And we helped this gentleman defer $50,000 into a SEP IRA, but because he also owned the company and he was the only employee, he was able to match a $50,000 contribution towards his SEP. So, that being told, he sidestepped about $100,000 in taxes. And we always like to see and hear stories like that. We like to be a part of it because there's just so many folks out there that don't understand corporate structure and the advantages that you can have at your disposal by being set up that way. And again, we cost segregation. All of you know what cost seg is. That's a great tool that's used. We have contacts that we can help with in that area as well. 1031 exchanges, we're very familiar with that process. Frank especially has some more in-depth knowledge in that area. And again, the whole concept of income shifting into retirement accounts for compound tax savings. And the whole key here is, again, let's reduce our tax liability. Let's use the Internal Revenue Code to take advantage of that and get the best buck for our get the best deal for our buck. So again, it's just one more aspect of things that we're more than happy to assist you with as you go. And again, this is for ordinary income, high W-2 earners, K-1, 1099, everyone, using section, 754 and 734B for, capital gain elimination. That's something that we're very familiar with. We use a lot, and it can help real estate folks who may want to sell numerous, doors at a time to reduce that liability that's going to come their way. So these are just a few more tidbits of things that we can assist our prospects and clients with. And again, Frank's going to go into the proactive versus reactive concept of CPAs.
Yeah, so we're at Aspen Creek. We're now members of Star Power. We're glad to be members now. So we're going to be around But just to give you guys, I gave a little bit of this at the conference, but how we kind of differentiate when we're working with different clients of all different sizes and situations, we really focus on our 6 areas of wealth management. That being asset management, credit management, cash flow, risk management, legacy planning, and tax planning. And there's different reasons that we focus on these things, but the biggest one is there's a lot of agencies and planning departments out there that don't focus and look at all these different areas. And there's not a one person that is perfect in all these areas. So where we really do our best for our clients is where we kind of quarterback all these different areas. Depending on the situation, we're able to bring in those experts like advanced tax strategists or estate planners or other financial planners for different situations. And I'll tell you, some of the meetings that we've had with a few of you, we've seen those type of opportunities to where it might not make sense to do one thing. It might make sense to bring in somebody to look at wills and trusts, things like that. So it's very important that you have whoever you're working with, have that quarterback, almost kind of like a family office, have that quarterback that's able to identify where there are areas of improvement. It might not be just tax planning. It may be estate planning. It may be other legal types of things that fit the overall picture. We have plenty of examples of that with past clients. Now, I also talked about the 3-legged stool, the legacy, the legal, tax, and financial, and how that all works together. And we've had many a times we've asked a client, how would you like it if your legal person, your tax person, and your financial person were all collaborating in their corner together, formulating your master plan for your situation, and then giving you that update? And almost every time they're like, I would love that, instead of having to go to this person and kind of try and connect the dots myself. So that's really where we do our best, is being able to bring all that together, to be able to strategize with all those folks, and then bring our best foot forward for the client and make sure we're not missing anything along the way. Ed?
Thanks, Frank. That really is a big deal, because we meet so many people that are trying to do this by themselves. And whether you're worth 2 million, 5 million, 100, it doesn't matter what your net worth is. Everybody's busy. Everybody's focused on their business development, growing their business unit. And it's very difficult for an individual who doesn't have a lot of financial knowledge to orchestrate and manage the tax attorneys, the CPA tax strategists, common CPAs. And it's something that we do. And I'm supporting what Frank just said. It's something that we work hard on with you to align all these items, tax, legal, financial, so that you're in a good place and you've got a strategic team with you and behind you. It's one of the sayings that we hear is, if you're not planning and coordinating with your CPA, who is? And it's a vital, integral part of everyone's financial plan is proper integration. And as Frank said, having a quarterback in place to assist you with that. One of the, obviously these can be pain points for all of us. Pain points in that, we don't know if we're paying the correct amount of tax. We don't know if we're getting the breaks we need. We don't know that our CPA is being proactive with us, although most of you should know that. We want to help. If you have a CPA that you feel is reactive instead of proactive, please let us know. We can help with that. We have a team that can assist you in those cases. And we've done so many calls after the Salt Lake Star Power meeting. We've done, I don't know how many we've done, Des could tell us, but over a dozen. And everyone seems to think, well, I'm not rich enough, or I'm not big enough for you guys, or, I'm not one of those, $10, $15 million people. Look, this filters really way down. If you have a tax liability of more than $50,000 or $100,000, we need to talk to you. We need to get with you and review your case. The way that process happens is we'll do an introductory call, and then we'll follow that so we get to know each other and kind of give everybody next steps. We'll follow that with a discovery call. And the discovery call, which Frank leads, it's just a big Excel spreadsheet, and we list all your assets and liabilities, so we have a good picture of what we're looking at and what we're trying to, how can we beat this? How can we reduce the tax liability on this? Are we going to have a capital gain this year or next? So it's all just common preparation, all logical, and it runs very smoothly. We typically need 2 years tax returns, personally and corporately, and financial statements, etc. We typically will bundle that up with package it up, and get it off to one of our tax strategists and one of our tax attorneys. So it's an easy process, not cumbersome at all. It's just spending time with you on Zoom meetings and learning more about what your goals are, what your needs are, and what you would like to see happen in your estate. And we've got plenty of examples. We've helped people with a tax liability of $100,000. We've got a high net worth gentleman in Southern Louisiana that he owns 2 manufacturing companies. He owns a lot of real estate, and we've helped him. We helped him reduce his tax liability using Internal Revenue Code supported ideas, both a captive insurance company and equipment lease financing, to reduce his tax liability from $2.5 million to $25,000. And so those are big wins, and that is the exception. Most of the folks we work with, we're helping them mitigate taxes on anywhere from $100,000 to $500,000. So just to give you a little background on how the whole process flows, we just wanted to share that with you. And so, Frank, if you want to finish us up here, and then we'll take some questions.
Yeah. And I didn't see any questions in the chat yet, but yeah, just a couple of other examples just to give you guys an idea or paint the picture. Everybody's situation is very, very different. We had one Star Power member who was getting ready to do a pretty large transaction financially, and we just happened to have the conversation with this person and realized that it might not have been a good idea to go in that direction from an estate planning and how they wanted to leave stuff to their children. That's one example. Another one where we're dealing with crypto and what to do with that. I want to be able to sell that, or I don't want to sell that. What do I do? I don't want to realize this capital gain. So those type of conversations is what we're having. And a lot of that is, upfront discovery, understanding the situation, and presenting options to you so that you can best make educated decisions from a tax, legal, and financial standpoint. So, yeah.
So go ahead. I'm sorry, Frank.
I was just going to close this up, but yeah.
Okay. Well, so Jeff, thank you for your question. So Jeff's question is lots of variables and per person, etc., which is correct. Again, that's why we don't do deep dives on these types of calls, because it's all individual specific to the person or to the entity. And can you provide some insight as to pricing for the various services? So our initial services, when we're meeting with you, doing discovery, getting all your facts together, learning more about your goals and your needs, that doesn't cost anything. There's no charge for that. Because we have to figure out whether there's something, of substance that we can actually help you with. So there's no charge on the front end. Obviously, if our tax attorneys or our CPA tax strategists get involved, there certainly are fees then, but it just depends on the complexity of the estate or the business. And it's again, it is a lot of variables and it is very, very individual specific. So to answer the question, there are no fees up front. So I hope that answers your question, Jeff. Annual plan or per hour. So obviously the tax strategists, CPAs, what's charged there are fees based on any one of the Internal Revenue Code supported opportunities we use to mitigate tax. That's fee. The attorney is going to be per hour. So the attorney's per hour, and the CPA tax strategist is fee based. And again, Jeff, as you pointed out, it all depends on what we have to set up, what we have to structure. If we're simply taking someone from a sole prop position to an LLC, taxes a S-Corp, we're talking less than $2,000 for that. But again, we want to make sure it's structured properly and that everything is coordinated. So thank you for your question, Jeff. That very good question.
And I got a question.
Okay. Did you see it, Frank?
I did see that. Yes. Thank you, Alyssa. Joe Jackson had a question. I've been an S-Corp since 2002. No, there wasn't an LLC option back then. Should I change to an LLC tax as an S-Corp? Great question. It is definitely something that you should get reviewed. As we know, there's a lot of benefits to doing that. So I would definitely consider looking at that for sure. We can have a chat with you, Joe, specifically on your situation and get you pointed in the right direction there.
So Jeff, to answer your additional question, do you file tax returns for client? We do not. We have strategic partners that will, but we do. Aspen Creek does not. We can't give any type of tax advice or legal advice. That's what we rely on our partners for.
We can heavily educate, but if we need to execute, we have people at the ready to do that.
Thank you, Jeff. Good question again.
I'm going to ask you guys another question too. If anybody would like they're close with their CPA, can they book a meeting with you and their CPA?
Yes, we Absolutely. Don't. So we're probably just the opposite. We're not trying to replace your CPA or your attorney. We work in coordination with them. And then the gentleman I was talking to you about in Southern Louisiana, he did change CPAs to the gentleman we introduced him to, and he did change his tax attorney. But there was a very good reason there. And it's something that I'm glad, Alyssa, that's a great question. Thank you so much, because it brings up a good point. It wasn't that he didn't like his CPA or his attorney. He just simply outgrew them. Mm-hmm. This is a gentleman whose business over the past 10 years has just gone crazy. It's grown exponentially. He's worked very hard at it. And it wasn't a matter of dislike. It was a matter of, hey, I've outgrown these folks. They're not going to be able to take me to the next level. And so we now have his team with him that we assist, Frank and I, on a weekly basis, certainly assist him with various, transactions that he has to get done right now. We're working on IUL strategy for him, Indexed Universal Life strategy for him, that is going to help him offset cost basis, capital gains when he sells his businesses. We're also assisting him with his 2025 equipment lease financing transaction. So it's just, look, we're here for the long haul. We first met this gentleman December of 2023, and we're going on 2 years of working with him and helping him structure and coordinate his companies and his personal estate planning to be in a great position to avoid probate, estate taxes, capital gains, etc.
All right. We got a question from Jeff. Elaborate on the capital gain elimination. Ed, do you want to start that one off?
So yes. So again, we're back to section 754 and 734B of the Internal Revenue Code. And again, we're not going to go deep, but one of the things we've done with several clients is we will set up index universal life for both spouses if they're married, and as that cash value builds up in the policy, okay, it is a proper product and entity structured product to use for basis offset. So we call it basis banking, where the cash value builds. We typically use leverage within the policy to continue, okay, to support that growth and leverage of cash value. And once a business or an entity or real estate is sold, we use the cash value in that policy to offset the gain to up to 100%. So again, this is it's something we want to. If you're interested in learning more about that, okay, no issues at all. We're happy to get on a call with you and take the deep dive.
Yeah. So and it's that one specifically is a pretty advanced strategy. There's moving parts. There's entity structuring. And as you'd imagine, that involves understanding what the exit plan looks like, whether it's real estate, whether it's your business, whether it's crypto, whatever that looks like. In that timeline, we're able to structure a plan that leverages these different moving parts to be able to accomplish that exit. So there's other strategies as well. So if people are, as an example, charitably inclined, there are strategies that we can design to help eliminate that ordinary income and capital gains from that perspective. So it all depends on the situation, but we're very, very confident that there is a solution for every situation.
And
we could use them in combination as well if needed.
Frank and Ed, I know in our network we have a lot of agents that are looking towards the future and looking as far as either selling their business off right now or passing it down to a family member. Is it best for them to get in contact with you now or wait until that transfer happens?
That's a great question. And I can answer that with an example. We met with a gentleman who has a business he's getting ready to sell in the drain industry. He has some IP associated with that. And we met with him maybe 6 months ago, did our initial discovery, have our single pane of glass. And what we did with that information is we went to one of our tax and estate attorneys and we said, hey, also we were looking at his will because he wants to give some of his business to his son and his other children, different percentages when he exits the business over the next year. So we started that planning 6 months ago. We met this morning with the estate and tax attorney who went over his will and identified areas where we needed to change some things up. We're taking that information and putting that into our design for how he's going to be able to eliminate the gain on that after talking to his CPA, doing some calculations on the basis and what it will look like on the sell. So all of that planning has been, so to answer your question, now would be the time to start the planning to be able to understand what that's going to look like on your time frame.
We always kid around when you're looking at exiting a business or passing it down to children, whatever the case may be, a sale. It's not an event. It's a journey. We typically tell folks to let us know 2 to 3 years before. If someone has in mind that they want to sell their business, let us know. Again, the sooner the better, because there's preparation that we can do along the way that will assist, again, in reducing your tax liability in that case. And again, one of the things, Jeff, that you asked about, again, we just discussed, is Section 754 and 734B that will eliminate those capital gains. So thank you, Alyssa. That's a great question. Thank you.
Yeah, and then one more to throw at you, just because I know it's going on a lot in our network, is we do have a lot of agents who are inheriting stuff from their parents. They're getting to that stage where their parents are either going into assisted living or unfortunately have passed away. So with that new information, again, is it kind of the same thing right now? They should get in contact with you to start the journey if they haven't, or wait until after the passing of their parents?
Absolutely. Let's have the conversation. We've had one of those conversations within Star Power already, and we've seen it in other cases with inheritance and those types of situations. So I would say definitely reach out, let's have an initial conversation to see what we could potentially do as far as planning for that.
Great. Melissa, any other questions?
I haven't seen any. Does anybody want to unmute themselves, or have this sparked any other questions? Otherwise, I would direct you to either contacting Destiny. Des is what I lovingly call her. Or there is a further video at aspencreekwealth.com/star-power that you all can go to. And then after you're done watching that, you can book directly from there. There is a form that you can fill out. So those are two ways that you can schedule with Frank and Ed. So Destiny is their scheduler and handles everything in there. Joe Jackson says this was very helpful and I appreciate this session.
You're very welcome.
Just remember, there's no dumb question. So if you want to get on with us and just ask questions or walk through a scenario of either yours or someone in your family or a client of yours, we're happy to join with you. But thank you, Alyssa. Appreciate it. Thank you, everyone, for joining us.
Yes, thank you all.
See you all soon.
Bye.